Welcome in YouTubers, I'm Tony Mendes. Today we are talking about refinancing when you have a divorce, changing title, or a cash-in refinance. It's a part 7 of a series of 7 videos on when to refinance. Welcome back, I'm Tony Mendes, host of the Real Estate Report radio show. I've been in financing for over 20 years. I am a Bay Area mortgage expert. Today we are talking about part 7 of a series of 7 videos on when to refinance divorce, changing title, and cash-in refinances. These make up about 5 to 10% of all of the refinances out there. They're not that common, but when they do pop up, people need to know what to do. Divorce is a tricky one. As unfortunate as it is, you still need to be prepared for it. It may not be the first thing on your mind in a divorce situation, but you want to get this information in advance, especially if you're going to do what they call a buyout. You're going to buy out the spouse. They need a cash payment from you. If you don't have the cash, then you have to buy out that departing spouse, as we would call it. So you're remaining in the property, and you're going to remove them from title, you're going to remove them from the loan, and you're going to refinance the property and give them a chunk of money. Do you qualify? That is the main question. So in advance, you can find this out. In fact, we have a lot of attorneys and spouses contact us way before they sit down at the table for negotiations to find out if they can do this scenario. If not, the next option would be to what they call a cosigning situation. You're actually cosigning with your ex-spouse. You do that before settlement, or you can do it after settlement. Either way, that income from the other spouse can help qualify for the loan and get that cash for the departing spouse. It doesn't remove the person from title or from the loan. So you have to make sure that that's well presented to that departing spouse, because the last thing they want to do is be tied towards that debt and then go try to buy another property and then find out that they can't because they already own a property and they're paying a couple $1,000s a month, and it kind of kills their ability to buy. So that has to be well thought out and well prepared for when you go into negotiations. That's what we do all the time. So the other option, of course, is if none of that works, then you just sell. So as unfortunate as that could be, that is we see that about 50% of the time. So cash-in refinances are another type of refinance that we see often, especially when we saw lower rates coming out of the Great Recession. A lot of people were starting to really pick up their employment. They were getting inheritance, they were getting bonuses and commissions, stock options, and they didn't, they were RSUs, and they were cashing in, and they didn't know what to do with the money. They'd already maxed out their IRAs, their 401ks, and other investment vehicles. What do you do with the money? Well, a lot of people would stick it into their house. But if you have a 30-year fixed and you put a large chunk of money, let's say it's $50,000, it doesn't change your next payment. So you're not really getting a rate of return on that investment at all. All you're doing is shortening your term. So what you need to do is a refinance. You need it to re-amortize, and you need it to re-amortize to the new balance, now $50,000 shorter. So if you put the money in on an ARM, for example, the next payment changes. So on a 30-year fix, it only changes the term. So be very careful about that. Just don't start putting a whole bunch of money in there and thinking that it's going to recast and you have a new payment. So we see refinances quite often with that, and we run those numbers all the time. And the last thing is changing your title. Really what that means is, can you remove somebody from a loan? Because title is really easy. You just go down and you sign a grant deed, and you get removed from title. You pay the appropriate transfer taxes. The remaining person on the title might be subject to an upgrade in their property tax basis. So as long as you understand that, that's fine, but it doesn't remove the person from the loan, and that's where refinance comes in. Same thing like a divorce. Do you qualify on your own to now remove this person during a refinance? You no longer have that cosigner. So more often before this happens, we see people contact us to run the numbers to see if that remaining person does qualify. So these are some of the other refinances that kind of fills in the gap of all of those other refinances in the first 6 videos. You can check those out here. You can always send us an email. You can set up an appointment with us at Calendly, and we have about 15-minute appointment that we can run some numbers for you and see if a refinance works for you. Thanks for joining us. Hope to see you in some of the other videos. Again, I'm Tony Mendes, host of the Real Estate Report radio show. We'll see you soon.